Good morning and welcome to today's seminar, where we will learn the importance of setting up your chart of accounts to ensure accurate reporting. To set up your chart of accounts, select Company and Chart of Accounts or keyboard shortcut Control-A. This will bring up your chart of accounts. In the bottom left-hand corner, click the Account button and select New or keyboard shortcut Control-N. Here's the list of different account types. The first is income, which is money earned by the business during the normal course of business. The second account type is expense, which is business expenses. There are fixed assets, which are major purchases. Bank, where you record your bank accounts. Loan, where you record your loans, such as auto loans and line of credit. There's credit card, which is where you record your credit cards. And there's equity, which is money that is either taken out of the business or put into the business that is not done so through the normal course of business. There are also other account types listed. These are accounts receivable, other current assets, other assets, accounts payable, other current liabilities, long-term liability, cost of goods sold, other income, and other expense. I would like to talk to you about other current liability. Other current liability, in this case, would be a client's retainer. To set up the client retainer account, select Other Current Liability and press Continue. Under the account name, we are going to type in retainer. And then we can type in a description here if we wanted to, an account number, a routing number, or a tax line mapping number. But in this case, we're just starting to put retainer. It's kind of self-explanatory here. So we're going to click Save and Close. This is now where your retainer will show up. It is important that we understand why the retainer account has to be under an other current liability. Under the revenue recognition principle of GAAP, revenue is not recognized until a service is fulfilled. So in this case, the attorney will take money on a retainer, and as he does work for the client, money will come out of the retainer account and go into the income account. This reminds me of a joke. What did the accountant say when he boarded the train? Mind the gap. I remember when I first started out in accounting, my first client was a banquet hall place, and I remember when the customers come in and put deposit down on the banquet hall, let's say 2 weeks from now, I would put the income in as soon as the deposit was received instead of putting it into the other liability account. It was a hard lesson learned, and you know what they say, when you learn something the hard way, you'll soon not forget. If you'd like a refresher course after today's seminar, or you know somebody that would benefit from a 60-minute crash course in QuickBooks, I invite you to visit fredpryor.com, where you can purchase a webinar and CD-ROM. We now understand the importance of setting up our chart of accounts in QuickBooks correctly.